right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for hanging out with us all day today. If that's what you've done, or if you just tuned in now, that's even okay as well. But this is the last time we're going to get together, and we have to remind you that there's something on after the show we'd like you to stick around for, and that's the Cow Guy Close. We love the show. I love it, and I love having you love it too. It starts at the top of the hour, 1 Central, 2 Eastern. So that's 1 Central, 2 Eastern. And we got, again, some 3 great guests. And we've got some super subjects that we want to talk to you all about. So it's 1 Central, 2 Eastern. Now, if you, for some crazy reason, you can't make it, we put it on the radio later on this afternoon, early evening, at 5 Central, 6 Eastern, rural radio, Sirius XM channel 147. And then we give you one more chance if you miss it over dinner or something like that, because we put it on for all the night owls out there. 2 a.m. Central, 3 a.m. Eastern. And that's Sirius XM channel 147, rural radio. So we give you 2 places to listen. One place to watch. That place to watch is at the top of this hour. I want to see you there. Again, that's in 16 minutes from right now. All right. Let's take a look and see what these markets have got going on for us, and we'll get back to you. Let's take a look at corn. Corn was up 5 to 6 cents. It's about 4 to 5 cents now. 4.5 cents better in SEP. 366.5 is last. That's about 2 3/4 cents off the high of the day there. Dees, the new crop, that's up 5 3/4 cents to 392 1/4, and again, that's 2 1/4 cents off the high. So just hanging around that 4 to 5.5 cents better board. Let's go to the beans. What's soybeans got in store for us? A 6 cent better board in SEP to 965 3/4. Nova, the new crop, up 4 3/4 cents to 985.5, and in the middle of those ranges too. Let's take a look and see what wheat's got in store for us. This is the Chicago wheat. SEP's up 9.5 cents to 507.5, and again, that's 3 1/4 cents off the high of the day. And we're working on a 17-cent range. Dees, the new crop, Dees is up 10 cents, a full dime. 535 evens last there, 3.5 cents off the high of an 18-cent range. Let's move over to the hard red in Kansas City. What's going on there? Well, here we go. 13.5 cents better in that SEP board. 538.5 is last. And I'm going to say that's 5.5 cents off the high of the day there. We move out to the D. Sets up 9 1/4 cents to 546.5. That's the hard red. Let's take a look at spring wheat in Minneapolis. What's that got going on? Well, that's got another board that's 7.5 cents higher in that SEP contract to 549. 6 cents off the high. And 8.5 cents off the lows. March is up 8 cents to 599 1/4, trying to put a 6 handle in front of it. And again, that's about 3 cents off of the high right now. That's spring wheat, Minneapolis. Let's take a look at cotton, and we'll get to our next guest analyst. That's down 34 points in that December new crop contract. 69.92 is last in cotton. Let's bring him in. Ted Seifried, Zaner Ag Hedge, fresh off his crop tour last week. Ted, thanks for being on. All right. Looks like you might have escaped the heat in that tour, but just the nick of time.
Yeah. What a difference a week makes, right? It is much, much warmer. It is hot right now and humid. It's the first time in 10 years that I can remember wearing a hoodie all 4 days. I mean, I'd have to take it off about 2 p.m., but man, it was gorgeous weather. Now, all that being said, well, the soybeans are a little bit worried about this heat and the dryness that we have in the east and south. You can see that happening on the board yesterday and today. I gotta say, there's a lot of corn out west that I think really needs this heat. I don't see this as a something that's really taking a whole lot of yield away from corn. If anything, it's going to help some of the more immature crops that we saw in South Dakota and Minnesota get closer towards that finish line that we were kind of questioning if it would or not. So I think the heat's good for corn. I think it's definitely giving us some concern about soybeans, though. I mean, there was a lot of flatter pods in some areas that we were in. There definitely needs at least one more rain, right? And right now, you don't have a whole lot of really good chances for the areas that are the driest. And we're talking about how river levels are falling very quickly. That's sort of a good indicator of how dry it's actually been. So yeah, this is a weather market, and soybeans have been stronger. Now today, soybeans went up and tested their 20-day moving average, and then kind of backed off that high just a little bit, but not by a whole lot. So to me, Scott, this feels like there's more upside potential here for soybeans, as long as there's not a big change or a big shift in that weather outlook. Technicals are one thing, but when you're in a weather market, you change that forecast and you can throw the chart out the window. So we'll see if there is a change in that forecast or not. But if there's not, it feels like soybeans have a little bit more upside potential here at this point.
Are you having your producers reward that rally after a little bit here, or what are you doing with it?
Yeah, for all intents and purposes, we've owned calls going into the end of next week, kind of with the idea that if on crop tour we went out and found a very different story than what the USDA had been saying, or if we get into this weather issue that had been kind of looming on the horizon, it would kind of knock us out of some of our short hedges, right? And at the moment, that's sort of what's happening. And I'm all for it. The question is, do we have a harvest low end? Should we be looking at reownership strategies? We haven't gotten to that point yet.
I agree.
But we will be looking. There will be more cash to sell. There will be, we are looking for a bigger bounce to get more aggressively sold on the cash side of things. But this is interesting timing. And I think we're all sort of welcoming the possibility of some upside here.
Yep, great stuff. All right, thanks for that. We're going to go away, stay right there. We're going to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge, right after this. All right, welcome back. This is where we talk about some livestock. Let's see what's going on with these cattle prices after yesterday's decent move in the face of maybe some bearish news. We'll see, but we're actually tacking on to the gains here today. Let's take a look at live cattle. There we go. We've got an October board up to $2.37 to $179.35, just 55 cents off the high of the day. And we've had over a $3 range. That's pretty good going, folks. D sets up $2.37 to $178.75. We'll take that, right? That's live cattle. Moving over to the feeders. What do they have in store for us? Well, they've got a little bit of a rally on themselves. SEP's up 90 cents to $242.25. And we've got October up $1.52 to $239 even. Again, only 82 cents off the high of the day. And we've had just over a $2 range there. So that's what's going on in the feeders. Then moving over to the lean hogs, they too got the memo. They're higher by $1.72 in October. 82.12 is last, and that's 35 cents off the high of the day there. All right, let's bring him back in. Ted Seifried, Zaner Ag Hedge. Ted, anything jump off the pages at you when we talk about those prices in the livestock?
Yeah, Scott. So you asked the question when we were talking about grains, do we have producers rewarding this rally? And I think I'm going to say this is a more poignant question, I think, for the cattle complex, right? You have both feeder cattle and live cattle having their bounce right to their 20-day moving average, which is really the kind of target that you expect to go to and hit and potentially fail at on a oversold market bounce or a rally. So you've got big resistance above us. I think this is a really nice time to reward the market for the bounce that we've had off the lows. I'm not so sure all of the economic reasons to be concerned about domestic demand have gone away. Maybe they've looked a little bit better in the last couple of weeks. But I still have concerns, right? And so I think this is a good place to be taking a hard look at that for both live cattle and for feeder cattle. Hogs are the interesting one, right? I mean, they are now trading above all of their major moving averages. That hog chart looks kind of, defiant. The thing is, we have layers and layers of resistance above us on hogs here at this point. So I don't know. I think all across the board for livestock, for producers, this is a good time and a good place looking at taking some downside protection. The one last thing I'll say is that, hogs have been sort of the interesting trade for some of your, financial Wall Street guys, based on the idea that if we do slip into a deeper recession, that you might see a lot more pork demand as consumers change their buying habits towards the more cheaper forms of protein. So, that might keep the hog market somewhat elevated. Mm-hmm. But again, you're at some very key resistance here, really everywhere.
Great stuff as usual. Really appreciate you coming on. Thanks for all the work you did on that tour as well. That's Ted Seifried, Zaner Ag Hedge, coming to us from Chicago. I'll bring it back here to Nashville and give it over to Suzanne just one more time.
Yeah, he did such a great job for us. I was hoping that he was going to sport the, we had Oliver Sloop with the tie, corn tie. Yeah. I was waiting for the corn hat.
He's got a corn hat. He also has a cow hat.
He also has the cow hat. We usually see that in the back shot. Not there today. Thank you, Scott. Of course, yes, Cow Guy Close coming up at the top of the hour.